Greetings and welcome to this video. Today we are going to do a recap of the trade we took from the Sunday analysis we did. Remember, we did Sunday analysis for the overall direction of the market on gold. We equally did on Euro USD, but the trade was finally taken on gold. So I'm going to do a breakdown of the trade that I took on gold after the analysis. So on Tuesday, I think it was on Monday, on Monday I took a buy here at this level, but I got stopped out. That is, I lost the trade. Why did I take the buy? We expected this zone to be a liquidity grab zone, and that was the case. As the market broke out of this zone and retested this zone here, forming a valid support or a double bottom. So once the market was going up after seeing these bullish confirmation candles, I entered for a buy. But unfortunately, my stop loss was very tight. The market spiked down a stop loss hunt, as I can see, and stopped me out by just few pips and continued as I predicted. So maybe the mistake, the error I made here was because when taking the trade, I wasn't close to my computer, to my screen. I just took the trade on phone. I think I was already out. I left the office already. I left the house already, so I was already out. But I've just took the trade, given that it was my setup. I just wanted to execute my setup, so placing a stop loss wasn't really appropriate. I didn't really calculate the stop loss very well, so I just placed a stop loss. I calculated stop loss based on, I think it was a position size calculator online. I just calculated on my phone and placed, so it wasn't well calculated. So normally this stop loss had to be down here around 100 pips. So if it was 100 pips, I would have finally been profitable in this trade. So I just risked around 50 pips on this trade. So it is what it is. We lost the trade, but finally, remember, we had two possibilities. We concluded, we said after the analysis, that if the market gets here, we might take buys, but if the market rejects and gets to this level and gives us a break and retest, it would be clear that we will be having sales at this level. Why? Because if the market breaks this trend line, breaks this support and gets down here, it is trying to tell us that the momentum, the downward momentum of the market is very powerful. So we should be expecting sales at this level. So when the market got here, gave me this break and retest, I took the sell position at this level, and the risk here was just about 60 pips, and it was a very easy trade to write. Why? Because immediately I entered the trade, the market just dropped as easy as you can see. Why? Because this trade was well calculated, it was well planned. It was just like flowing with the river, flowing with the overflow with the overall direction of the market. So it was a very easy trade. My target was at this level, 360 pips. Remember the video. If you didn't watch the video, go back and watch the video of the analysis. You will see our target was 360 pips, close to 400 pips. We hit target, but I exited the position a little bit earlier. I exited position around 250 pips, somewhere around here. I entered two positions, so I exited one position and let the other run right up to this level before I exited. So that is how the trade played out. It was a very beautiful trade and very easy. So we recovered back the losses we made here, and finally we were in profit so far. So today is Wednesday. So far we haven't taken any other trade today. So what I'm going to do right now is I'm going to do a quick analysis for the market to see if we're going to have a trade for tomorrow Thursday upon the London or New York session. So I'm going to clean back this chart. I'm going to clean back the chart and mark my zones at fresh. Okay, so I'm going to get back to the 1 hour. Remember, we already did top down analysis for the week. So what I'm going to do here is just to do some little adjustment in order to flow with the trend of the market, the current trend of the market. So what I'm going to do is I'm going to reduce this to be more precise with this. I want to be more precise with this. As you can see, we are on the 1 hour time frame. Okay, so right here, this is what I'm seeing here. Right now. So I'm expecting, let me equally mark this zone. I equally see something at this level. I equally see something right here. This is what I'm seeing here. Remember, I like to be very precise when I'm doing my analysis, especially when I'm marking my zones. I like to be very precise. So this is what I'm seeing currently. and I will still use my trend line. I will still place my trend line in order to create my channel. I'll still use my trend line. As you can see, I'm going to clone. As such. Okay, so this is it. This is what I'm seeing in this market presently. This is what I'm seeing. Let me be precise with my trend line. Okay, so this is what I'm seeing in this market. What I'm expecting in this market right now is we may either see something of this nature. We may either see a push, a break right here, right down to this level to form a valid double bottom for me before we push up. So this zone, this little zone here, will serve to me as a zone of liquidity. We have this as a liquidity sweep zone, because I know a lot of traders who put buy positions at this level, expecting market to push right here, but I use this zone as a liquidity sweep zone, so I expect the market to get to this level before pushing up. Why? So this market is going to fully fill this double bottom, properly fill this double bottom. So equally, it doesn't exclude the fact that we can see something of this nature. The market can still get here and give us a break and a retest, and get down to this level. So these are the possibilities I'm seeing for now. And equally, if it happens that this market decides to go back up directly, we may see a push right up to this zone. And at this zone, this is where another major decision will be needed from us. So right here, we will be needed to either decide to take sales at this level, or to either wait for a break and retest and then continue the upward movement. So this zone here is a very strategic zone. If the market retests this zone, it would be a very strategic zone. We may see something of this nature. The market gets right here and we have a valid double top at this level. Double top after all this liquidity clearing or sweeping, we can have a valid double top and we push back down to this level. Or better still, we can reach here and get a break and retest and continue the upward movement. So where is a risky zone for me to take a trade here? This zone is a risky zone for me. This zone, taking a buy here is very risky for me. It's very risky. And equally, taking a sell here is very risky for me. But waiting for the market to get at this level and deciding to either take a buy or sell will be less riskier for me at this level. So these are my two zones where taking trades will be more confident, here or here. So this is what I'm seeing in this market. This is what I'm seeing in this market on gold presently. So I think we just need to let the market do its thing. I think by London session, tomorrow by London session, we may either see this market at this level. We may either see this market at this, in this zone, or we may see this market in this zone. From there, we can take our decision to either take a buy or a sell, depending on the market structure or depending on what the candlestick patterns will be giving us as information. So this is all I see for gold. This is all I see for gold. I will not spend much time analyzing. I will not spend much time trying to think or sort out things in the chart. This is just the simple thing I'm seeing in gold. This is it. So thank you for watching this video. See you in the next video.